Hello and welcome to another edition of the China in Africa podcast, a proud member of the Sinica Podcast Network. I'm Eric Olander, and as always, I'm joined by CGSP's managing editor, Cobus from beautiful Cape Town, South Africa. A very good afternoon to you, Cobus.
Good afternoon.
Cobus, today we're going to talk about the China-Africa trade issue. It's a topic that we haven't touched on in a while, but we got some new trade numbers, I think it was last week or the week before, relatively recently, that talk about the first 8 months of the year, and they give us an indication of where China-Africa trade is going, and there's some very interesting trends to look at. Cobus, let me just give you the highlights of these numbers. You covered this in our newsletter, but for those of you who don't get the newsletter, here are the numbers. So China-Africa trade in the first 8 months of the year, $222.05 billion. Now that's up 15.4%. So it looks like the China-Africa trade relationship is going to be on track to exceed what they did last year, which was around $292 billion. So we're probably going to cross the $300 billion mark. Let's look at the exports. So Chinese exports to Africa, and this is where one of the key stories in that I'd like to talk to you about. They surged 24.7% to $141 billion. Imports from Africa grew only 2.3% to $81.25 billion. So there is a rather large trade deficit that seems to be getting larger and larger in China's favor, and certainly not in Africa's favor. So the trade deficit now is at $59.5 billion. That is almost, in the first 8 months of the year, the total for all of last year, which was at $62 billion. So exports to Africa grew between 2 and 4 times faster than Chinese exports to Southeast Asia and Europe and Latin America. Very interesting. What was your takeaway from those numbers?
The trade numbers came around the same time as a set of reports from the climate studies world showing that there's been a very rapid increase in solar panel exports from China to Africa. So my first thought was how much of this is made up by solar, and kind of what the kind of breakdown of products and so on are, to add more kind of context to it. But overall, it certainly seems that China is ramping up its exports to the global south as it faces a lot of trade barriers in the global north. And I think that, both of us have made that prediction, but it is kind of striking to see, it kind of coming true in this way.
So there was a little bit of surprise, and maybe it's too early, that we're not seeing the uptick of exports from Africa to China after the Chinese government earlier this year announced the elimination of all trade tariffs except for Eswatini, who does not recognize China because they still have relations with Taiwan. But every other country in Africa now has duty-free access into the Chinese market. I guess a lot of people are hoping that that will be a surge and provoke a surge of products going from Africa to China. But so far, the data is not showing that. Now, maybe too early. Another problem, though, Cobus, might be that tariffs aren't the huge problem, because remember, about 20 countries had zero tariff access into the Chinese market for a long time. But it was non-tariff barriers that were really causing the obstacles for African products to enter into the Chinese markets. These are these photosanitary requirements, oftentimes the logistic issues. So there's a lot of other issues besides tariffs that complicate goods moving from one region to another region. Were you hopeful, or are you hopeful, that these tariffs that have come down at the same time as U.S. tariffs are going up will make a difference in the China-Africa trade relationship?
The tariff thing is confusing me, I have to say, because on the South African side, recently, like last week, Wu Peng was saying, and he's a Chinese ambassador to South Africa, he was saying that they are working with the South Africans to remove the tariffs on the basis of the zero tariff rating. And I'm like, why are you working with people? Why don't you just remove the tariffs? Like, that part I did not understand. So, and also from speaking to a friend of mine who is an agricultural reporter, she said that some of the tariffs are still in place. Like they are, like South African citrus producers are still facing a certain number of tariffs in the Chinese market. And that again, they are in the process of removing them. So I did not get why the removing the tariffs is a long process and not kind of the moment the regulation is done, it's done, right? So I don't 100% understand that part. But then on top of that, I think the other problem is, as you were saying, the non-tariff barriers is a real thing, to the extent that the Chinese are now putting in training for African countries to get them through the phytosanitary kind of regulations, in order to try and kind of get more products into the market. I think the third thing is that a lot of African countries don't necessarily produce what China wants to buy. And on top of it, then the other question is the bigger question about why is a continent that's still so food insecure supposed to be exporting agricultural products to China? I mean, that's right. the other kind of like bigger kind of philosophical question in there.
No, that's a big question, that Africa is still a very big food importer, and China is a massive food consumer. And this has always been one of the moral questions of whether China should be encouraging agricultural and food exports or imports from Africa. Mostly the Chinese buy food from South America, Brazil, the United States still is a major supplier of food, Russia, Europe. African countries struggle to produce food at the quantities and scale, except for South Africa for the most part, that the Chinese really need, because just the demand in China is so huge. I'm really glad that you brought up this confusion about the free trade and the tariffs, because I saw a bunch of articles, too, that Kenyan President William Ruto declared that he had negotiated a tariff-free entry for Kenyan tea into China. And I was really scratching my head on that one, going, for the same reason you were, thinking to myself, well, wait a minute, I thought all the tariffs came down. So somewhere there's some confusion in this tariff policy. Clearly, African leaders know something that we don't, because they're making these announcements about these discussions, and yet we thought they were all gone. So I'm not really sure what's happening there.
Yeah. We should also say that this issue of a food insecure Africa and its position in the global kind of agricultural commodities trade is also true for all of the other markets it exports to. For example, like a country like Zimbabwe has recently celebrated getting access to the Chinese market for its blueberries, and it also produces a lot of blueberries. Let's say many tons of blueberries for the European market. So it's exactly the same thing. Like Africa is also kind of flying out all of these products, to Europe, like in larger scale than to China. And I mean, the most famous of that being flowers from Kenya. So kind of Kenyan roses, like notoriously use huge amounts of water, in a region that is water insecure, kind of, and doesn't actually feed the population, but global trade trumps all, So it's not only a China-Africa problem, it's an Africa and the global market problem.
Yeah. Well, when we talk about China-Africa trade, we have to remember that this is a very distorted relationship. First of all, it's kind of bizarre to talk about China-Africa trade. One is a country, one is a continent. One country versus 54 countries, and we have to always remember that. I always find that when the Chinese talk about China-Africa trade, they almost talk about Africa as a country, as if it's a singular entity. And yet when we look at the breakdown in where do the Chinese trade in Africa, again, highly distorted. 5 countries account for about 2/3 of the imports from China. Not a big surprise that it's going to be Nigeria, Egypt, Kenya, South Africa, and Ethiopia. Why? These are the big markets in Africa. So they are the big consumers, but they account for about 2/3 of all Chinese imports coming into the continent. Same in reverse. About 5 countries account for about 2/3 of all of the exports from Africa. You won't be surprised, Cobus, to hear it's the major resource exporting powerhouses. We're talking about Angola, Zambia, the DRC, South Africa. These are these big exporters, and to some extent Nigeria increasingly. But the rest of the continent, we're talking 49 other countries, do not have as robust a trading relationship with China as these 5 big ones do. So they may import quite a bit, but they don't sell much back out again. So it's really important when we look at the China-Africa trade relationship that we apply some nuance to who's buying, where things are going. But most importantly, though, and this is what I'd like to get your take, is the South Africa-China trade relationship is by far the most important in the continent. About 20 to 30% of the entire trade volume passes through South Africa. Now, not all of those goods are South African. South Africa, in many ways, is a gateway for products from across Southern Africa to come through. But Cobus, today, the South Africa-China trade relationship seems to be taking on much greater sense of urgency than before because of the deteriorating relationship that South Africa has with the United States. What's been the vibe in South Africa talking about trade and how South Africa might be able to get out of the hole that it's in because of the U.S. tariffs that have been put on the country?
The South Africans are kind of scrambling to find alternatives. What they're particularly looking for is, they're trying to strike trade deals all over, and a lot of that includes agricultural trade. So there's a lot of talk about the possibility of getting South African stone fruit, that's plums and peaches and so on, into the Chinese market. And other kind of product categories are also getting a lot of attention. At the same time, I think they're looking for a few different kinds of investment. First, they're looking for investment in manufacturing and assembly in the auto sector, because the U.S. auto companies are quite heavily invested in South Africa, so Ford particularly, and that made up quite a lot of the trade with the United States under the African Growth and Opportunity Act. The African Growth and Opportunity Act now seems doomed, and South Africa is facing 30% tariffs on top of that anyway. So there's, the kind of calculus of that, those kind of auto exports don't work anymore, and there is a lot of fear that Ford is going to withdraw from South Africa, and there's a lot of jobs riding on that relationship. So they are apparently in conversation with different Chinese auto companies about the possibility of taking over some of those assembly and manufacturing plants in the country, which is quite well developed. At the same time, there's every week basically you see new imported Chinese vehicles being announced in the South African market, and then these European companies that do manufacture in South Africa, like BMW, for example, are warning that cheaper imports are undercutting them, undercutting vehicles that are manufactured in the country. The problem is that the European companies have been criminally overcharging. Okay, criminal is the wrong word. They've just been overcharging. Figuratively speaking, kind of like to the extent that it is more expensive in actual price comparison to buy a Mercedes-Benz in South Africa than it is to buy it in Germany, for example. So there's so much kind of the prices are so weighted. So them being undercut by cheap Chinese imports, raising the alarm around that, in relation to manufacturing South Africa rings a little bit hollow for the South African consumer. So that's happening. At the same time, they're also frantically looking for investors to save a smelter, like a steel smelter, which is being priced out of the market due to higher energy costs, because of South Africa's kind of energy problem, and because of cheap steel imports, in the global market, mostly coming from China. So it is this kind of weird situation where sometimes South Africa is kind of talking to China to deal with problems that is also partly caused by China.
Right? Yeah, ironically, that this week, this trade question has been on the agenda in South Africa, and the China-South Africa Trade and Promotion Conference got underway in Johannesburg. And it's very interesting because there's been this effort on both sides. So we talked about the South Africans looking to fill the gaps with the United States, but the Chinese are going to great effort actually to appeal to the South Africans. So at this conference that got underway in Johannesburg, they put on a big show and they played this promotional video. It was a 5-minute video. I'm going to spare you guys the whole 5 minutes, but I want to give you a flavor of it, and you can kind of get the vibe and the tone of what the Chinese government is trying to do in South Africa. So this was the opening promotional video at this fair that started on Tuesday in Johannesburg.
Nothing, not even mountains and oceans, can separate people with shared goals and vision. This is the best description for the enduring friendship between China and South Africa. Entering the new century under the joint leadership of the two heads of state, China and South Africa have embraced a golden era of bilateral relations. China has remained South Africa's largest trading partner for 16 consecutive years, while South Africa has been China's largest trading partner in Africa for 15 consecutive years. In 2024, the bilateral trade volume exceeded $52.4 billion US dollars, accounting for nearly 1/5 of China-Africa trade in whole. China is firmly committed to high-standard opening up and has been actively expanding imports from African countries, including South Africa. In recent years, signature South African products, such as wine, rooibos tea, and avocados, have entered the Chinese market. To date, 68 categories of South African agricultural and food products have gained access to China, earning strong recognition among Chinese consumers with their distinctive flavors and premium quality. China and South Africa share a strong commitment to free trade.
Okay, there you have it. Rah, 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 Cobus. Go China-South Africa trade. Always funny that the Chinese government promotional videos use North American accents for their voiceovers. Yeah. I just find that rather ironic given everything that's going on. But okay, you even heard in there, he talked about 20% of China-Africa total trade. Again, that's interesting. That's good for South Africa, not necessarily great for the rest of the continent. And it speaks to this distortions that I was talking about in terms of the concentrations. Again, this is a $52 billion trade relationship. The one point that he did not mention in the video, though, was that South African leaders are becoming increasingly concerned about the trade deficit that's closing in on $10 billion. This is a big problem in South Africa. In fact, your deputy president went to China this summer in July and address this issue on the trade deficit. Also, we've seen it from Ugandan President Yoweri Museveni, who also said these deficits are not sustainable. And the deficits are particularly damaging because a lot of these countries that are very, very short on dollars have to spend hard currency to pay for the imports. And that does affect inflation and the value of their own currency and whatnot. So this China surge of exports into developing countries has some real consequences for the economic stability of those countries. And that's a problem that we have there. When you hear that video, though, in light of everything that's been going on with the United States, with China, with Europe and others, does it give you the feels? Do you get excited when you think, okay, somebody's paying attention to us? It's a forward-looking, positive vision. Or do you kind of see this as something a little bit transparent and commercial and transactional?
I guess, it's difficult for me to hear it outside of years of focusing on soft power kind of building, so it's like I could just hear the kind of like soft power planning kind of like in the background. In general, like it's kind of like I think what one shouldn't kind of underestimate in all of this is the psychological impact that the Trump administration has had on South Africa. In the sense that South Africa has always felt very kind of like on the same page with the US, right? It's, from the Clinton era to the Obama era specifically, they've always felt, like South Africa, they felt like South Africa was kind of an embodiment of this kind of like arc towards justice that, that Obama was always citing. and in having moved from apartheid to democracy. And, so since then, I think and particularly right now, like the South Africans feel, I think they feels like kind of like low level traumatized a little bit by, by the turn that the relationship has taken. So I think the very fact that someone is speaking to us in a friendly tone, is already counts for a lot.
Well, that is something. I mean, tone matters, right? In all relationships.
Exactly.
Let's hear a little bit more from the Chinese. So Wu Peng, who you mentioned, who's the well-known Chinese ambassador in South Africa, he used to be the top diplomat for the Chinese Foreign Ministry for all of Africa, and he was on our show a couple of years ago. He gave the opening keynote address at this trade expo in Johannesburg. Let's take a listen to some of his opening remarks.
Today, as avocado and dairy products have gained market access to China, 66 categories South Africa agriculture food products can be exported to China. Of course, I'm now working very hard with South African side to open Chinese market to more South African fruit, especially the stone fruit. Maybe we can sign a protocol next month. So your agriculture minister pushed me very hard, give me a lot of pressure. But I think that is a good pressure I would like to do. I give you an example, 90% of South Africans' pecan nuts and half of your macadamia are actually sold to China. Even a lot of Chinese, they don't know when they eat this kind of nuts, actually most of them are from South Africa. These products have enriched the food basket of Chinese consumers and, more important, increased the income of South African farmers and exporters.
So he reiterated what you basically said, stone fruit, agriculture. I guess the question that I have is that all sounds great, and I think those are good talking points, but that's not going to close a $10 billion trade deficit. In Kenya, it's even more stark, where they're importing $5 or $6 billion from China and exporting out less than 300 million. I mean, the gaps are enormous, and food, these exports, these commodities, not going to do it. You're only going to close that gap if you're selling a high-value commodity like oil or maybe cobalt, or you're selling a finished good that has a high value into it. But you're never going to sell it enough macadamia nuts to close a $10 billion trade deficit. So the equality in the relationship will remain starkly uneven so long as this is the dynamic. And that is the dynamic, by the way, not just with African countries, but the entire global South that imports raw materials from that China imports raw materials and then exports finished goods. It's a structural problem in the relationship.
Exactly. It's a result of the structural position of China in the global economy. China managed to become the giant that it is by really, really perfecting manufacturing and then selling, manufacturing for export was the entirety of a large part of that success story. And so if you are a country that exports everything to everyone, then you're not importing stuff from elsewhere, except for the stuff that you need to make all of these stuff that you manufacture. So, so there is I think part of it, there's, over the longer term, I think two factors will probably start kind of complicating this situation, if not changing it. Is that, as China moves to a consumption economy, that part of that will shift. But that's a slow process and it's going to take a long time. And at the same time, on the African side, there is a race to diversify these products, right? So rooibos tea, for example, South Africa has recently kind of woken up to the realization that rooibos tea is now actually popular in the rest of the world. It's a non-caffeine tea that's indigenous to South Africa.
It's great, by the way. It's absolutely
it's really nice. And it's now particularly popular in Japan. So the South Africans are now, and within South Africa, there's a lot of rooibos related spin-off products. Like there's a lot of rooibos related, like beauty, cosmetic products, soaps, and so on. Like they use rooibos in a lot of stuff. Those markets have not been created in Asia. They haven't. Those products haven't been tailored to Asian taste, marketed to Asians, translated. All of that work still needs to be done. So at least South Africa is a little bit along that road. A lot of other African products, like they're still stuck at the basic product level. They haven't even done the work of like being like, oh, okay, if we press oil from these nuts, then maybe we can sell the oil for higher rate. Those kind of like planning is still in the infant stage, I think, in a lot of African countries.
And this is the difficulty when we talk about it in the context of Africa. But again, this applies to Southeast Asia. It applies to Latin America. It applies everywhere. Let's take northern Nigeria, the Kano, the textile trade, which has been decimated by Chinese imports. Now, a lot of people will blame the Chinese for that. The Chinese have done this. The weird truth about all of this is that it's a bunch of Nigerians in Guangzhou who are filling up containers and shipping them back to Nigeria. So it's not as simple as the Chinese are doing this. Lots of people are involved in this process. The problem is, though, is that the China price is so competitive. The Chinese are so efficient. Nobody in the history of manufacturing has been able to produce at the scale and the cost that the Chinese can do things. So whenever a country either starts to move up the value chain to the point where the Chinese are threatened by it, and Chinese companies are threatened by this price competition, what they will do is they will just lower their pricing to the point where they knock the competition out of business, and you can never beat the China price because they will come in at a scale that's incomparable. Now, here's the problem. If you go to, actually in South Africa, we've talked about the China malls. Consumers love them. Low prices, high quality goods, fixed prices, no haggling, air-conditioned environments. People love them in Nairobi, in Johannesburg, in Abuja. We get the same story all over the place. So it benefits consumers, but it destroys producers. And so where do countries like South Africa fit on this supply chain if you have to get to industries that you can't compete with the Chinese with, or else you'll be whacked because they'll hit you back?
There's a part of this equation that I don't understand very well myself. That I'd love to speak with a trade economist about, which is the impact, the other forms of so the other forms of like kind of impact that the China price is having on African markets, right? So I read a fantastic piece, and now I'm unfortunately fully blanking on where it was published and who wrote it, but like a really interesting piece, like looking at the exactly this impact of cheap Chinese kind of West African style textiles being imported to West Africa. And in this particular country, which I'm now blanking on, unfortunately, the larger issue of the garment industry was that it was controlled by a small number of kind of middle people who had access to high quality fabric that was at that stage imported from Europe, and then controlled the kind of high end garment sector. In the process of the flood of Chinese goods kind of moving in, their kind of gatekeeping monopoly was broken. And in the process, a set of traditional kind of economies of kind of garment creating was destroyed in the process, right? But what it also led to was that there was this sudden like explosion of low-level kind of seamstresses all over this West African city, suddenly making this stuff from cheaper fabric because they could just get it. They didn't need the gatekeeping connection to get access to the fabric.
And the cheaper fabric came from China?
Yes, the cheaper fabric came from China. And that's why they could get it for so cheap. It's because it was made in China. It was because of the China price. And so that then kind of sparked an additional kind of like set of new garment markets, kind of in that economy. What I still have no idea about is like how that shakes out over the larger scene, right? Kind of like, do you gain? Do you lose? Like who gets replaced? Like what, like, so there is a feeling for me that there's a missing piece in this argument, because it is true that a lot of stuff that African countries produce get wiped out by just a cheap Chinese version of that produced at scale and that they can't replicate at price. But I feel that the real kind of like untapped aspect of the African market is that kind of first getting onto the first rung of the consumption economy, where there's a whole set of people at the bottom of the economy who've never had that kind of moment where they are expressing themselves through consumption, kind of for the first time, where they're kind of like constructing their identities through market consumption, right? Like like through the kind of clothes they wear, for example. And what gets unlocked by a flood of cut price products that were previously kind of like inaccessible to them. It may not be as simple as kind of as them having bought one thing and now they're not buying that anymore because there's a cheaper Chinese version. Some of the people who are buying Chinese stuff are buying those kind of things for the first time. So it looks like a kind of a more complicated thing that that is kind of being unlocked there. But like it's very difficult for me to say like who's winning and who's losing.
You are talking about on the consumer side, there are noticeable benefits, as we've talked about. Price competition, prices become lower, the range of products becomes higher. But this is where African policymakers and Donald Trump may have something in common. That the fact is that Donald Trump is angry, and as we see in Europe as well, that American companies can't compete with Chinese companies, and they've been thrown out of business. The deindustrialization of the Rust Belt, for example, again, with the complicity of American stockholders and American companies, of course, but the China price was formidable there. And so this is not, again, uniquely an African thing. I thought you were going to go somewhere else with this. And this is a conversation that I've been having with our critical minerals editor, Obert Bore, on where do African critical mineral exporting countries, how can they compete in the global economy to capture more value? And one of the things that we hear at all of these critical mineral conferences, and it's thrown out as just a statement of fact, that African countries need to move up the value chain by processing minerals. And I don't have any hair left anymore, but if I had hair left, I would want to pull it out every time I hear that, because it's a stupid statement. Because at the end of the day, no African country is going to build a full-scale mineral processing ecosystem that will rival what China can do. Never going to happen. They don't have the water, they don't have the technology, they don't have the high skill, they don't have the power for the most part. That infrastructure piece is huge. Okay, so there are structural reasons why this will never happen. What we're talking about with Obert, though, is really guiding policymakers to say, okay, if it takes 17 steps to process lithium to the point of final use in a battery, where in those 17 steps can African countries really excel? Maybe it's steps 1 through 3. And identifying that. And then in their trade relationships with the Chinese, they start putting on conditions to say, we need technology transfer, skills development, we need all of the building of infrastructure around steps 1 to 3. That level of precision in the discourse is not there. We're still talking about benefication as if it's going to be the whole process. And again, that's just naive, because you're never going to compete with the Chinese on that. Full stop, period, end of story. Okay.
And even if you could,
it would be very expensive.
And even if you could, you still wouldn't necessarily be creating that number, like a large number of jobs, right? Kind of because the beneficiation, the refining of critical minerals isn't necessarily a very kind of labor-intensive process, right? So
it's a very polluting process, by the way.
It is a very polluting process. So yeah, kind of like I agree that remains there's a kind of almost like a kind of a tunnel vision, around this idea. Whereas like some mining experts that I've kind of like heard speaking have said that there's actually a lot more opportunities in looking at at the kind of adjacent, like expanding the adjacent sectors next to the, kind of next to the mining, kind of industry, and building those out, like different kind of support, sectors and so on. The other issue, I think that another kind of tunnel vision that's in this conversation, all the time, is this assumption, and I think one could argue this up and you can argue this down, but the assumption that the only way for African economies to grow is through manufacturing. Manufacturing, of course, is a key part, and we now we've now circled back to a manufacturing vogue, kind of after many decades of people talking, about manufacturing being almost like an afterthought. But one of the big, like meta trends in Africa is that some African economies seem to be jumping directly from low levels of economic development into services economies, with no kind of manufacturing like phase in the middle. And so there's a question, I think it's a set of questions to be asked about whether manufacturing equals economic development, and and how what you can add in there, kind of considering that manufacturing is difficult to foster. And one interesting example is if you look at a company like Transsion, right, kind of which is this Chinese company that made a ton of money in Africa by selling cheap imported phones. There is the beginning of assembly ecosystems for phones, in countries like Kenya. But the vast bulk of the jobs created by Transsion is actually on the service side, right? It's in dealerships, it's marketing, sales, fixing phones, like screen repairs, like, those kind of things. And so there, it's not really a situation where, Chinese imported components or Chinese imported phones is knocking out a sector that was producing before, because a lot of these countries didn't have a phone sector before. But they still are kind of creating jobs. They may be creating low-level jobs, and those jobs may not be necessarily leading. I think that's where the issue is the difference in the quality of jobs, and the difference of the kind of special sauce that manufacturing brings in growing additional jobs in an economy. So yeah, it's difficult.
Well, so on the manufacturing side of things, this is a topic that we talk a lot about here in Southeast Asia, which is a manufacturing hub for a lot of offshore Chinese products. But when you talk to people in the manufacturing sector, this is not a future growth industry, because the automation and AI and big data that are taking over manufacturing. I mean, just look at how a car is produced today. There's barely any people on an assembly line. Nike is working exceedingly hard right now to try and wipe out as many jobs out of their manufacturing process as possible, so that they can have robots put the leather and the rubber together and the shoelaces together. Eventually, they will get to that. And so I don't know if there's a big future in human-driven manufacturing. It's going, and that's going to lower the cost and the price of goods as well, because stuff made by robots is ultimately going to be cheaper than stuff made by people, and so the volumes will increase. So I'm not sure that's it. But one of the things that we hear from experts, though, is that if we're talking about manufacturing, again, competing with China, never going to work. You're never going to see Africa as a hub for manufacturing that's going to rival what the Chinese do, or even to some extent what the Southeast Asians can do, given the scale. But what we do see a lot of potential, what everybody says, is taking advantage of intra-regional trade in Africa itself. So you'll have manufacturing and production in South Africa for Namibia, for Zimbabwe, for DRC. That has a lot of potential. But again, I get very frustrated when I go to these stupid conferences of NGO people and UN people who talk all about the AFCFTA and don't want to lay any blame or just call out the just incompetency of African leaders who maintain these trade barriers and maintain the fact that it's still easier to ship something from Mozambique to China than from Mozambique to Kenya. And I mean, how many years is it going to take after the AFCFTA has been passed for these trade barriers to come down? I mean, just at what point do we call these people out for being ridiculous?
So just for people who haven't been following this, the AFCFTA is the African Continental Free Trade Area, which is the world's largest free trade area, and was agreed by the African Union a few years ago, and is now necessitates all of the African countries to remove trade barriers and a lot of other barriers,
Huge
logistics
potential.
barriers and so on. It's
Huge
usually
potential.
huge potential because, Africa is a fractured market of 54 countries, but when it comes together, it's a unified market of 1.2 billion people, so it's potentially a market the size of India or China.
$1 trillion market.
Yeah, I think the thing to keep in mind around that is how embedded those tariffs are in some African countries' budgets. I think that is the problem.
But at some point,
like they've
short-term
become normalized
pain for
and it's difficult
long-term gain,
to
right?
Exactly.
I mean, it's
so
because I mean, there's an excuse
and
for everything.
one should
I get it.
say. Yeah, well, one should say that a lot of this is happening already. Like there is, like for example, Namibia made its first shipment, I think, to Gabon like this week or like 2 weeks ago, on kind of like under the AFCFTA kind of like new rules, like kind of tariff free. So it is slowly happening. And if you go to a country like I was recently in Zambia, and like South African stuff everywhere, right? Like South African shops everywhere, like a whole bunch of South African products. So there definitely is some flow, It's but
It's just
the
not
potential
anywhere
is still
near
very
what it
small
needs to
compared to
be.
the potential. Yeah,
That's right. And there's a new urgency now, though, given what's happened with the United States. And let's not put everything at the feet of the United States, because at the end of the day, the U.S. wasn't really ever a big economic player in Africa. I mean, it didn't buy a lot of what Africa sold. Most of what the Americans bought from Africa was Nigerian oil. And as soon as the Americans figured out how to get shale oil and drill for huge quantities of their own natural gas, they stopped buying Nigerian oil. And that's when you see the trade numbers just plummet. So the United States was not a major factor in Africa trade. I mean, it was a factor, and it had a lot of jobs in Ethiopia and a lot of jobs in South Africa tied to it. But across the continent, not a big player. I think they're at, 40 billion now? I mean, it's a tiny number relative to the 300 billion we're talking about with the Chinese. But nonetheless, there is this urgency to do something, in part because we're starting to see youth uprisings in many parts of the world. Kenya included, Jakarta, Nepal, now in the Philippines we're seeing it. How long do you think it's going to take before it starts spreading? If these young people don't feel that they can get ahead, they're going to go to the streets. That's what we're seeing.
Yeah.
And so I just wish there was some more urgency to reform these trade systems so that they are that $1 trillion, billion plus market is more accessible. And again, then you're not competing with the China. You have to find a space in the global trading system where you're not competing with the Chinese. That being said, Cobus, one of the concerns about the AFCFTA is that those Chinese goods would make their way into South Africa or be produced in South Africa and then just flood the market, do it tariff-free across Africa, and then harming other producers at an even lower cost.
Yeah. Working out local content issues, local content proportions and so on is one of the key issues of the AFCFTA, and that's one of the reasons why it's so complicated to implement. So that is definitely an issue.
And that governance,
one of
the
the
governance
things,
issue is going to be tough, though, Cobus, because it's such a patchwork across the continent in terms of governance competency.
I have a somewhat kind of like. And this particularly, I only kind of like make this argument in relation to solar power specifically, but I have a kind of a somewhat counterintuitive kind of like view of this. I think, so I was in a conference a little while ago where there was a lot of talk about Africans, South African specifically solar manufacturing, and there is a South African solar panel company, and they are manufacturing. So that is certainly a thing that is it's happening. There's this solar panel manufacturing in kind of like through Chinese investment in Egypt as well, in Algeria as well. So it is definitely possible to do, but my argument was that Chinese solar panels are now so subsidized, and so they're facing so much kind of like trade barriers everywhere else. I tend to think that Africans should just use that opportunity to just pave the entire continent in solar, and just get over the electricity hump. And then once they've gotten over the electricity hump, then choose what manufacturing makes sense. Because once you have an electricity surplus, you can pick and choose the kind of manufacturing that you would like to do, right? And then one of the things that you can then do with that surplus electricity is to produce more solar panels that you could then sell on to the rest of the continent, which has a huge demand.
Couldn't you make the same argument about cars, that if BYD is going to sell a car for $10,000 in South Africa and it knocks BMW out of business for overcharging, you know what? Good riddance, BMW and Ford.
Exactly.
People get much more affordable, high-quality cars at a lower price. I mean,
Exactly.
I have no
and then
sympathy whatsoever for BMW.
they have additional
in this market.
income that they could then stimulate the rest of the economy with.
That's right. And by the way,
yeah.
mobility is a key economic driver. People being able to move from point A and goods being able to move from point A to point B is only going to help. In Africa right now, when it comes to mobility, when cars in specific, half of the million new cars sold on the continent every year are sold just in your country alone. So again, big distortions in how autos are sold. So if the Chinese can help facilitate more mobility across the continent with more affordable, more accessible cars that are designed for global South markets, great. I think it's
exactly.
Well,
so then it becomes a kind of a discussion about what then the kind of knock-on economic effects are, of this trade, and then that is a much more kind of like mixed and a kind of complicated discussion, right? Kind of because then you're talking about the possibility of the old. Kind of the old Rumsfeldian kind of like known knowns and known unknowns, and unknown unknowns. And so kind of an unknown unknown in our case is which kinds of like untapped, uncreated markets there still are in Africa, right? Kind of like which things African consumers would be willing to pay money for that don't exist yet. My guess is the only people who can really tap that market are Africans because they know it, but they will probably do it with some form of Chinese input, like some component, some what, like some kind of like whether it's electricity or literal like manufacturing components or
textiles,
some machinery or whatever, like so there will be some kind of like hybrid situation, I think, developing, kind of where it's a kind of something of like co-created kind of thing, but I have no idea what that would be.
Well, we are going to come back to the trade issue at the end of the year once we get the full trade numbers for the year, which again we think will be in excess of $300 billion if the current pace goes on. I just encourage you that when you hear these announcements about China-Africa trade, again, that you think about those distortions that I talked about. Africa is not a country, even though the Chinese oftentimes when they talk about it, talk about Africa as a singular entity. Of course, it's not. And then look in terms of these deficits, which are hugely problematic. Again, not just in Africa. We see these massive trade deficits around the world. And this is something that China is going to have to confront at some point, because just pumping massive quantities of goods into the global South is good for a short time, as Cobus pointed out. It brings real benefits to consumers.
Forever,
But in the long run, if countries can't produce anything because the China price is so cheap, then you're not going to have enough jobs and employment. That's the argument that Donald Trump is making. That's the argument that the right wing in Europe is making. So, this is a global problem. And again, I understand where the Chinese are coming from. I mean, they have an economy that they have to generate as well. But as Cobus pointed out, this is a highly complex, it doesn't boil down to good or bad. No matter how you look at it, you will see both in it. So, Cobus, thank you so much for your time today. And thanks for another great week producing the newsletter. If you want to see all the great work that Cobus and the team are doing at the China Global South Project, they produce some amazing work. In fact, I'm going to just toot our horn here a little bit. I mean, we are genuinely the only service of its kind dedicated to doing this kind of daily analysis. And so if you're interested in what China's doing in Asia, Africa, Latin America, the Middle East, Central Asia, it's not like I can say we're the best. We're actually the only one who's doing it. And so on a daily basis. And that's why about 25 governments use our service every day. We have dozens of universities, think tanks, analysts, NGO activists, diplomats, policymakers, and even some ministers. We have a couple ministers, Cobus. I can't say who they are, but we have a couple ministers. And so this is I'm just so proud of everything we're doing. And by the way, we are now just mere weeks away from launching China and Las Americas. My Spanish is terrible, but we're about to launch a new Spanish language service. Our new editor, Maria Cervantes, is based in Lima, Peru, and she is producing some amazing work en Español, which we're going to launch very soon as the site is ready. So we'll have an announcement on that coming very soon. So we'll be in French, Spanish, and in English. And of course, always our reminder, if you are a student or a teacher, email me, eric@chinaglobalsouth.com, and I will send you a half-off discount link, and the subscription starts at just $10. Okay, Cobus, we'll be back again next week with another edition of the China in Africa podcast. For Cobus van Staden in Cape Town, I'm Eric Olander. Thank you so much for listening and for watching.